What's up, day traders? As you know, there are a lot of big institutions in the market with billions of dollars under management. They're there when you see a reversal, they're there when you see a strong breakout, they're there when you see a strong trend, and they are the key to your success. It's these large institutions that give the market structure and create supply and demand. That's why it's our job to understand how to trade like the institutions so that we can be on the right side of the trade. So let me show you how to read market structure to identify supply and demand zones so that you can start trading like the institutions. You see, most of the market's movements are random. Most of the time, stocks don't have any real news or any real reason to be day traded, and that's when you'll see charts moving randomly with no real patterns or trends. And that's because most of the time, the big institutions aren't trading. They're patiently waiting on the sidelines for the right time to enter a trade. And when hedge funds enter their trades, they create supply and demand zones. And it's that supply and demand that helps drive the price in our direction and helps protect our stop losses from getting hit. So let me show you how to identify supply and demand in the market. The first thing I do is I look for support and resistance. What I want to do is start by drawing out all the most obvious support and resistance levels possible, and these levels should immediately jump out at you. So if you're sitting there wondering, is this support, is this resistance? The answer is no, that ain't it. So don't go drawing a million lines everywhere, okay? Because remember, simplicity is key. So the key to drawing support and resistance levels is starting from left to right, and by drawing them where you see the most amount of reversals possible. So as you can see, we have a ton of reversals down here as support, and then we also have a bunch of reversals up here as resistance, and then we also have a high up here. Looks like we have some support and resistance down here, some right here as the high, and then down here as the low. And another thing to note is that I'm drawing these support and resistance levels far away from the reversals and from the price action because the market does not move perfectly. The market likes to draw outside of the lines. So it's really important that you don't go drawing these really close to the reversals, because what's going to happen is you're going to see something like this where it spills out and you might think that it's a breakout. So then you're entering a short position when really it hasn't actually made a breakout. So make sure that you're not just entering the second that you see a breakout like this. Really give it a bit of room. So now that we've drawn these support and resistance levels, you can really see what I was talking about earlier about how choppy and random the market is when it's between these support and resistance levels. You can see here that it just kind of moves around randomly. There's no real rhyme or reason. If you were to try to trade these in between these choppy zones, you're just going to be losing money left and right. So start thinking of these supply and demand zones kind of like magnets. What's happening is the price is either repelled away from these magnets or it's pulled towards these magnets. So every single time you can see that the price always comes between these magnets. So not only is supply and demand creating the structure of the market, but it's also giving you your best opportunities to enter a trade. That's because if you wait for these opportunities here, it gives you your best opportunity to buy with a small stop loss and a large profit target. Whereas if you're entering a trade between the supply and demand zones, like over here, you're going to have to use a really large stop loss so that it's safe on the other side of the demand so that your stop doesn't get chopped up in this random nonsense. And then you're going to have a very small profit target because you're going to have to deal with this resistance level right up here. That's why we use these support and resistance levels as our entry. And now the final thing that we want to draw out to identify supply and demand is going to be our support and resistance in the form of trend lines. So as you can see here, there are actually diagonal support and resistance levels that occur in the market. So what I do is as I start seeing strong reversals like these three right here, I will start to connect them to draw out that supply and demand. And as you can see, this works very well because you have 1, 2, 3, 4, 5, 6, 7, 8 times that this trend line came into play. And same with this down here. 1, 2, 3, 4, 5, 6, 7, 8 times. And not only do these trend lines show you where the supply and demand is, but they can also show you where the current trend is. So as you can see from this, the current trend has been in an uptrend for about the past year or so. So now that we've drawn out all the supply and demand, what I like to look for is when the price pulls back to a level of support, then consolidates and then breaks out in the direction of the trend. So we can see right here, we have the direction of the trend is going up because we have a higher high, a higher low, and another higher high once it breaks out. Then we have this pullback right here to support. It then consolidates in this little area right here. And then once it breaks out through there, that then reconfirms that it's back in the uptrend. So that's when I would enter right at that level with a stop loss beneath the support. And so that's going to give me this large profit target with a very small stop loss. And as you can see, the same exact thing happened over here where it pulled back to this level of support. It then consolidated in this level here and then broke out. So that's our entry. That's where we can make a small stop loss. And then we're looking for at least 3 times that profit. And you can even see the same thing here where it consolidates. We have the support right here. So yet again, you have a very small level for your stop loss. And then we just want 3 times that risk for our profit target. So all 3 of these would have been really good entries. And know that there are going to be times where you have consolidation just like this right here, and then a breakout, and that it doesn't make it all the way to your profit target. And that's fine. There's no way to be right in the market all the time. Day traders aren't supposed to be right all the time. We're just supposed to have an edge where we make more money than we lose. All right, so let's go over a couple more examples on how to draw out supply and demand. So here I pulled up Meta, and what we're going to do, yet again, go left from right. And we're going to draw out support and resistance levels where we have the most reversals. So as we see here, we have some resistance right here. We have some support right here. Looks like we have a high up here, some resistance right here. Here's a top. Here's some support, more support. Here's a bottom. So now we can see yet again that these supply and demand zones act like magnets where they either repel the stock or pull the stock to them. And in between these zones, the stock moves extremely choppily. And that's why it's so important that we're entering at these supply and demand zones where it's less choppy and where these supply and demand zones are going to keep our stop losses protected. All right, so let's not forget to draw out all of our trend lines. So as you can see here, we have yet another trend line. And then here we also have another trend line. Now, as you can see here, this trend line worked very well. It worked a handful of times. And once that trend line was broken, we actually created a new upward trend, which then created another trend line. And it's also really important to note that just because a trend line gets broken doesn't mean that it's a reversal. Like as you can see here, this broke down here out of the trend. It came down. That does not mean that a stock is automatically going to trend in the opposite direction. What it does mean is that this trend line is no longer in play. So once that gets broken down like that, we can then remove it because it's not useful anymore. All right, so let's go over one last example of how to draw supply and demand. So what we're going to do, as always, is start left to right, where we want to draw support and resistance where there are as many reversals as possible, including the highs and the lows of the chart. So as you can see here, once we start to draw these out, we actually have a lot of clarity on this chart. As we get these giant supply and demand gaps, we are able to enter with a small stop loss and a large profit target. So now it's important that we draw any trend lines that we see to give us even more clarity. And as we can see here, that after this third reversal right here, we really started seeing this trend And same with this one right here. Once we saw about this third reversal level, we really started seeing this trend line come in. And this is perfect because anytime we get a triangle or a pennant or a wedge like this, where the stock price comes together at one point, it almost always creates a small stop loss here and then a large breakout. And you can see that that worked perfectly. And that is why I entered right here on this breakout with a fairly small stop loss just down back inside the pennant. And although this already hit my profit target up here of 3R, I'm actually looking at re-entering right here, because if this breaks out right up here, that will give me another good stop loss with another good profit target. And if you want to learn my supply and demand trading strategy, how to find good trade setups, and then how to enter and exit those trades, then check out my video on supply and demand strategy. Not only that, but I've also uploaded my personal trading guides and trading checklists in the description below for free for a limited time. And I still use that checklist to this day to take some of my very best trades. So until next time, take it easy on yourself and you've got this.